60 seconds, Kell. Okay, a very good day to you all. Welcome to the Wall Street Blockchain Alliance's latest global member webinar presented by our friends and colleagues at WSBA corporate member Verady. Some housekeeping for all of you. Today's webinar will be recorded. All attendees will be in listen-only mode, so we will reserve time at the end for Q&A for 10 to 15 minutes. Please submit all of your questions via the Zoom chat. And now, without further ado, I will turn it over to Mr. Kell Canty, CEO of Verady. Kell, take it away.
Great. Thanks, Ron. I really appreciate it and glad to be here and glad we can be a corporate member of WSBA and participate in great events like this. Since you're controlling the slides, I'm going to have to ask you to move forward for me. And we'll go through the presentation like this, and it'll be great, and then open it up for Q&A as you mentioned. So first, we're going to do a couple of introductions so you'll get a sense of who I am and who Verady is, and how we speak about these matters that are so complex and important nowadays. We're going to review the current taxation rules with a little bit of history and why it's important for the accounting profession in general. And then the outlook for crypto asset usage and how firms should be prepared for this. The thoughts on the evolution of the accounting of financial markets and the tools needed and what qualities that are needed in them. We'll give a brief presentation on some screenshots for the tools that we produce called Legible for tax reporting and audit. And then we'll do the Q&A, which hopefully is the best part of it. Really like to keep this interactive, and given the nature of the ecosystem, there's always questions, which is great. Next slide, please. A little bit about me. My background's in computer science. I've done a couple of different startups and worked globally in different payments, SwiftWire, ACH, Fedwires, ranging from, work in Tokyo, Belgium, worked with Barclays Bank, ABN AMRO, a lot of different organizations, and then did a startup that did risk decisioning and evaluation that was acquired in FICO Corporation. And with my computer science degree and payments, naturally, kind of attracted me into the crypto world, where I got into it around 2012. I ended up founding a startup called Coinbase in 2013 with a major client of BitPay, the world's largest cryptocurrency blockchain payment processor. They're here in Atlanta, and that's where we're based and I live as well. Was a charter member of the Bitcoin Foundation Regulatory Affairs Committee. I've spoken to 3 sitting senators about rules, laws, and regulations around crypto. Not sure how much of it stuck, but you got to start somewhere, right? Then co-founded Verady in 2016 to concentrate solely on the accounting, audit, reporting, and tax for cryptocurrency and blockchain assets in general. Little disclaimer, all the information that we talk about here is for discussion purposes only. None of it constitutes official guidance or financial advice in any way, form, or fashion. Contact your appropriate professional for that, or yourself if you are the appropriate professional. And I just wanted to throw that out there and love to talk about this subject. It's very important to me. So there's my direct personal email if you want to contact me afterwards. Next slide, please. A little bit about Verady. We actually pioneered Bitcoin financial reporting back in 2014. Conducted one of the world's first Bitcoin audits on the world's largest Bitcoin processor, BitPay. At that time, right now, they're doing over $1.3 billion a year in payments. Great organization. Tons of wallets, tons of cryptocurrency activity, and that was perhaps not the easiest one to start with, but it really kind of set the bar for us. We've expanded from then into business accounting, where we have partnerships and relationships with Intuit QuickBooks, as well as the Xero accounting platform, as well as NetSuite, and have expanded into some of the leading organizations in the blockchain space. Algorand, the entire chain, as well as blockchain that has 49 million wallets globally, and some of the top firms in the accounting profession. So we've done over $100 billion in crypto reported, over $10 billion in crypto accounted for daily, and we analyze over a million transactions a month. We've been a little quiet doing our work kind of behind the scenes, but are starting to come out a little bit more. Next slide, please. Next slide. It's kind of a placeholder. So in terms of why firms need to be interested in this and what the nature of the challenge is, crypto tax, hopefully you guys are aware, is complex with the data scattered all around and non-standard. And it's not getting any simpler. It's getting more sophisticated. And there's a particular segment of the market called decentralized finance, or DeFi, that's getting even more complex. The IRS has recognized this. There's a lack of education, guidance, and most especially compliance in this new asset class. So they have noted this, and in fact, the IRS Chief Counsel, Michael Desmond, has stated that 8% of Americans own cryptocurrencies and are required to report their activity. We'll see some other estimates on this next slide, showing that the IRS is kind of middle of the pack. So 8% from the IRS, 14.4 from another source. These are all hyperlinked in the presentation, by the way. So you can click and go to the original source for this, 6.2 and 9%. And if you take that percentage across the number of Americans, it's a very large number, which we'll see in terms of the ones that report is a pretty big disparity. Next slide, please. So the original ruling from the government around the nature of cryptocurrencies and virtual currencies came in 2013 from Fincen, Financial Crimes Enforcement Network Division of the Department of Treasury, and then followed up soon by the IRS 2014-21, wherein somewhat disappointing to people who'd been in crypto and in fact the name currency, in that it's been designated property and remains designated property. An interesting twist about that we might talk about when we get to the FAQ is that the digital representation of value definition that they have here is dependent on it being convertible into quote unquote real currency. So the question of whether some things like in-game currencies such as Fortnite V-Bucks is still a little bit on the table with a couple of other things. So after that issuance in 2014, we went over 5 years without hearing anything else in the nature of guidance. Next slide. IRS wasn't avoiding this or not paying attention because a lawsuit actually revealed that they were looking for information around filings, particularly on 8949 data. If you take that 8% of crypto, and I know perhaps it wasn't 8% back in these years of 2013 through 15, but if you think about 2015 and 802 individuals reporting transactions related to cryptocurrency on 8949. And by the way, I was one of them. So I'm not sure what the other 801 people, what they were doing, but there were likely and almost definitely thousands and thousands of people not reporting. So non-compliance has been noticed and is a continuing issue in this industry. Next slide. So some of the things they've done leading up to 2019, they've actually acquired blockchain analytics software. I believe Chain Analysis has been involved with that, wherein even with people not reporting, they can go ahead and get information about people and whether they've transacted in cryptocurrency. They've issued a John Doe summons, which went through a bit of a legal battle, but they've acquired information from Coinbase, the leading exchange in the world, about activity. And then sent out letters. They sent out 3 different types of letters this past summer. One about penalty of perjury, and then others that are somewhat reminders, like you might want to examine, we think you've had cryptocurrency activity and you need to report on it. So they haven't been negligent in keeping track with the compliance, and I think from their standpoint, it is vastly underwhelming. Next slide, please. So in 2019, in October, they issued a new revenue ruling, mainly dealing with forks and airdrops, though there were some problematic issues around that we'll talk about. They also created a dedicated compliance division for the IRS for virtual currencies, and they issued a FAQ around that. And then also they actually changed the official Schedule 1 form that goes with the 1040 and asks for a disclosure and an affirmative statement one way or the other, whether the taxpayer has participated in some way with virtual currencies. So pretty big movement in the past months around cryptocurrency from the IRS standpoint. Next slide, please. A little bit of the reaction to the guidance in terms of the 2019-24, as well as the FAQ. Actually, the GAO took a look and did some examination and found that the clarity was lacking in the guidance. There's also aspects of it being retroactive in nature. The actual wording and terminology used in the revenue ruling was contrary to industry standards. We can talk about it a little bit more offline or in another area, but the way they've referred to forks and airdrops is not consistent with what the industry uses. And that can lead to a pretty detailed conversation around chain splits and soft forks and hard forks, but just to let you know that it is not congruent with what the industry uses. One of the great resources around this that I would highly recommend is from the Aicpa Comments. They were forward-looking enough and responsive enough to issue in February a great comment on that, bringing some of these subjects up to the attention of the IRS. And here's hoping that they listen to that, as well as other feedback from organizations like ourselves and others that are participating in the industry. We're hoping to get a little more guidance and a little more clarity out of the guidance as things move forward. But I really would recommend the reading of that comment letter. One of the things particularly interesting is that in the FAQ, which is fairly comprehensive in terms of numbers of examples and how they're doing things, is that it's not formal, it's not authoritative, and it's not binding. So when you're looking to a document from the IRS, you want those kind of attributes around it. It also wasn't issued in the form that you could, of a notice that comment could be made on formally. One of the most troubling aspects of that, though, is that it being on a website and not being revisioned. We've had definitive cases of where the guidance, or not the guidance, the FAQ, has been altered with no notification to anyone. So remember when I talked about the virtual currency definition and mentioned that the V-Bucks for Fortnite was mentioned? Well, that was originally included and then disappeared overnight. And that's not the way we like to see the kind of guidance and things from the government on how to move forward. And so it provides no protection. Next slide. So in terms of how the IRS is thinking now and what they're doing in 2020, I was fortunate enough to listen into another great WSBA webinar that actually had IRS agents and supervisory agent on it. This is clearly a priority at the IRS. It affects all their training, it affects the way they think and the way they hire, actually, and all agents are being trained on virtual currency. So this is a big deal. They've actually upgraded their analytics software for determining taxpayers that may have transactions that are not reporting. And that is Coinbase Analytics, which is the next generation of analytics software to be able to pinpoint these transactions and who is involved in conducting them. Additionally, the Drug Enforcement Agency and the Department of Homeland Security are also putting on this analytics software, and it is not anonymous. So for any one of you that is still talking with people who believe it's anonymous, I would say no. They're mainly looking for voluntary disclosure and willfulness before they go to prosecution. I will say that they held a virtual currency summit on March 3rd, wherein they did a lot of listening and did not really add in a lot of clarity. So they're continuing to get more information about feedback. But what I think we're all looking for is we want some more clarity, and we want the correct clarity added in, and that's not necessarily happening right now. Interestingly, there's also a public notice that they're issuing a formal request for contractors to assist in cryptocurrency audits. So highly talented individuals and firms and tool vendors that can participate in aggregating, valuing, and tracking cryptocurrency activities in order to be prepared for upcoming crypto audits. So this is definitely something along the lines of enforcement that they are looking to start working with. I will say that I think that some of their plans have been sidelined, as many things have been with the coronavirus. I know they're dealing with a lot of issues. As we all know, the tax deadline was pushed back. There's mountains of mail. There's a ton of issues. And so I believe their enforcement and compliance campaigns have been delayed, but trust me, they are not forgotten. And this is in one of the top 3 priorities for them from enforcement. If you watch their recent communications in the past couple of weeks from their online webinar and seminars. The other thing that's interesting, if you're not familiar with, is that the Fincen travel rule, as a result of the Financial Action Task Force, which is a global entity, is now coming into play. I'm fortunate enough to sit on the committee of the global standards body that created the IMS 101 messaging around that KYC information. So that further is going to give information to the service about people participating in this activity. And that is been scheduled to go about in June. It's being delayed, but that is again coming to fruition and being deployed on a global basis. Next slide, please. So some of the things we're looking for more clarity on, or that perhaps need some guidance, and we're not sure when we're going to get it, that need a particular attention to. Chain splits, forks, airdrops, again, that will have some difficulty in being rectified in terms of the language they use. This particularly is with exchanges, that if a chain split occurred on an exchange, there's actually a ruling in the past week around Coinbase and someone having an account with Bitcoin at Coinbase and there being a Bitcoin gold chain split that had value. Well, whether that individual could acquire that cryptocurrency resulting from the chain split or not actually is going to court. So there's some issues around custodials and chain splits, and whether they, as well as airdrops, and whether they will be available to the individual. There's also this issue of dominion and control, whether you're actually in control of that and whether you're affirmatively doing something with it in terms of liquidating or transferring to someone else. And that is not clear as far as we can tell. Additionally, complex decentralized finance operations are not clearly laid out. And the analysis of that will differ on a facts and circumstances basis. So if you have issues relating to that, that will be something that will have to be self-determined. Partnerships is another great example of how the guidance maybe is a little short. You could have a partnership that someone is a member of and it could be participating in, and there's no current way of that partner being aware of that, and then also no way of doing the disclosure appropriately. Valuation methodologies, level 1, 2, and 3, if you want to get into that for more institutional clients. And then also just in general, are you using VWAP, or are you using time of transaction? Is, you know, we provide pricing information in our software tool from various sources that are industry standard. Is that acceptable? There's some clarification that needs to happen there. Next slide. So the growth is outpacing the services guidance by far. Again, the IRS is hampered by the corona for the 2020 tax year. It may be delayed, and clarification may continue to be delayed. We think that between, you know, the accounting profession, they'll have to bridge the gap in conjunction with technology tools providers like ourselves to bring that forward, because we're not sure when we will see full clarity, particularly given the increasing complexity and the rate of innovation in this industry. So crypto assets aren't going to hold and wait for the IRS to clear this up. They're going to continue creating these crazy derivative products. There's aspects called yield farming, liquidity mining. You're ending up with transactions on smart contracts that involve multiple entities, multiple tokens in various really interesting ways that are sometimes hard to characterize. So that's kind of a challenge. Next slide, please. So that's kind of the overall situation we're faced with right now, but what's it looking like for usage in the future, and how should firms prepare for this usage? Next slide. I kind of break it into 3 different sections. So let's talk about what does it look like for institutions and corporations. Well, if you look at what Fidelity recently came out with, over a third of the large institutionals own crypto assets. That's pretty big endorsement. If you think about the Yale Endowment now owns crypto as a part of the allocation. I was actually really amazed a couple months ago when most of the heavy financial advisors, one particularly came out and said, let's talk about what percentage of your portfolio you should allocate to cryptocurrencies. It's not a question of whether you do or not, or whether you should or not, or whether they have value or any of that other stuff. It's what percentage, which is a fantastic change in conversation and a very telling and meaningful one. A publicly traded corporation recently bought $250 million of Bitcoin, with their CEO stating it's better than cash as part of their capital allocation strategy. Also, the largest exchange in the world, Coinbase, is now preparing for a possible IPO. So again, this is not going away from an institutional or corporate standpoint. In fact, it's accelerating. Next slide, please. A tremendous announcement from the OCC, the federal agency that regulates the banks, giving the clear green light to banking institutions across America that they are able to custody cryptocurrency for their clients and also participate in trade activities for them. So that's probably one of the biggest regulatory clarity and letters I've seen in this industry to date. And that's going to have a lot of waves going forward. Again, that just came out a couple of 3 weeks ago. JP Morgan, great turnaround from when they said it was a fraud years ago. They're banking crypto clients. They have a production blockchain payment network. They have a production settlement network. And other banks such as Silvergate, Signature, Metropolitan Bank, and others are continuing to go. So that, from a banking standpoint, again, accelerating. Next slide, please. So Coinbase's first half of 2020 review revealed to everyone that they have over 35 million accounts. So perhaps you weren't necessarily interested at the institutional level or at the banking level. Well, let's talk about the individual level and the account level of overall mass adoption. 35 million is a very, very strong number. So again, at the individual level, continuing to accelerate in adoption. Also, if you look at DeFi growth, I think the number is 8 to 9 weeks that the amount of crypto held in DeFi has gone from $2 billion to $5 billion. Quite a trajectory there, and it's continuing even now. Stablecoins for payments are accelerating. Again, yield farming, liquidity mining. I encourage you guys to look out, and women, to look out and kind of get some information about that and see where this is going in terms of decentralized finance on a forward-looking basis. And then just this morning or yesterday, we learned that the Federal Reserve Bank of America is working with MIT to evaluate central bank digital currency options. China's already looking to issue one and doing pilots in several cities. Next slide, please. So recommendations for firms around this activity. What I've seen that works the best, and again, this is general recommendations, it can depend on where you are in the adoption curve and education curve for blockchain and cryptocurrency assets. We find it's best when you appoint a specific group or individual to be the lead for the understanding, tracking, and evaluating your firm's relationships and the opportunities in the crypto asset space. So, making it official, making a lead on it, whether it be a group or an individual that leads that and is the go-to for establishing that. Also, from the standpoint of just general education, to make sure that you're perceived as moving forward and a firm of the future, that you can have that education process happen across your entire base of team members within the firm. Also, we found that some firms that do that, they end up finding natural leaders who are attracted to it and will act as that leader within the firm to help drive the adoption and understanding and education. So that's a great process to ensure everybody's at a basic level or a baseline of knowledge, and then that can help bring in those individuals. Next slide, please. Particularly, we think it's important to ensure that your client acceptance has the appropriate knowledge and risk assessment for onboarding crypto assets. Again, with banks entering it, institutions entering the game, great organizations that you can provide services to are there. But I will say there needs to be the knowledge for some of the others, maybe that have been part of the ecosystem that you may not want to onboard. And you've got to have that crypto knowledge in order to be able to appropriately classify and assess those risks. The other thing, and the final recommendation here, is to explore the tools available and look at the ones that have the broadest reach and capabilities and reliable coverage for your client needs. Next slide, please. So the evolution of accounting and the financial markets due to the crypto assets, we've touched on a lot of this already in terms of the adoption. Next slide, but let's go ahead and just hit some of the highlights again. As the asset ecosystem continues to evolve, and let's use the term grow up, in terms of you know, the OCC, banks, large institutions, and particularly some of the exchanges, the wallets, and other things, you're starting to see great institutions, Gemini, get SOC audited. We think that's a baseline for participating at any level, but particularly the institutional level and exchange level. And we would highly recommend that if you have the ability to work with an organization to help them get SOC audited, that would be an opportunity to bring new business into the firm, as well as to support and enhance the crypto asset ecosystem. Financial statement audits are coming more and more as institutional investors get involved, and as publicly traded in entities that are under stricter regulation are participating in the ecosystem. The ability to do accounting outsourcing. Again, a lot of the organizations involved with crypto assets may or may not have a mature financial or finance department and will need help. So again, as an opportunity, if you're leading the charge for your firm, you can have the ability to offer help to maybe a fairly young startup, or a startup that's grown so rapidly in the technology and in the asset class that they haven't had time to do the blocking and tackling needed. And so that's a strong opportunity that we've seen throughout the industry. Obviously, tax for individuals and businesses. 8% of all of America having crypto assets, as quoted by the IRS, is a huge number. We think that that's going to come into play as the enforcement and compliance happens. You may only have a few clients right now doing this, or reporting it, we should say. And you'll see more and more as adoption continues, but more importantly, as the enforcement and compliance continues. And then there's always the case for advisory. Again, some of these firms, some of these startups and corporations in the blockchain space are immature and need a business professional that you can provide to give them advisory to kind of face the future and make the plans for it. Next slide, please. So the innate nature of the immutable blockchain, I mean, if you look at RPA and some of the other innovations, in a way, what we're doing and other firms are doing, other corporations are doing with their crypto assets is actually leading to continuous audit that has always been talked about. I think that's a great thing to be moving forward. And at some point, a non-crypto blockchain can enable that for traditional currencies. Secure data sharing, similarly in that, you're seeing a lot of that in supply chain. Walmart has adopted this and is using that to track and account and make sure of their food supply. And then the possibility of being able to do triple entry accounting is something that's kind of on the horizon. We'll see where that goes. Next slide, please. So in terms of tools, we see some people still trying to struggle with this manually and doing it with existing tools such as Excel. We don't think that's sustainable, and it's not just because we produce tools, but if you look at the complexity and volume of the ecosystem, we've looked at people who are trading up to 18 million trades a year. That's not going to be sustainable to do analysis and cost basis tracking on that. Tens of millions of accounts, wallets, tens to thousands of coins and tokens, DeFi and smart contracts. The tools should bridge the traditional financial reporting as much as possible so that there's less need to learn all of the lingo and they should be accessible. And the creating organizations and systems of the tools should be of quality and should be AICPA SOC audited, the organizations. Next slide, please. So now we'll talk a little bit and give a brief overview of some of our products, just to give you a sense for how we go about it. This is the legible dashboard for accounting, and just a quick screenshot, but we'll go through a couple of things. Next slide, please. We actually offer both audit confirmation. We act as a specialist in this for multiple clients. In fact, we're announcing next week, I'll go ahead and tell you that we've signed internationally Mazar, South Africa, as a client for doing confirmations of cryptocurrency activity balances and ownership. We also offer for the accounting the business subledger that integrates with Quickbooks, Xero, and NetSuite. And then our legible tax, which is our latest platform out there. And we originally developed that in collaboration with Thomson Reuters when they unveiled their virtual currency organizer in the Go system platform. Next slide, please. So we've been used since 2014 in this. We have very great clients, and we actually are SOC 1 certified and are working toward SOC 1 and SOC 2 compliance. Next slide, please. Next slide. The accounting dashboard allows you to report on, both from an accounting and audit standpoint, wallets and exchanges. We do roll-ups for historical balances. You can see the as of date, and the actual portfolio and allocations and growth and valuation of that. Next slide. Again, we do automated, integrated API with Xero and Intuit QuickBooks, and custom integrations with NetSuite. Next slide, I'll show you a little bit of how that works, wherein you can actually set up integrations. This actually syncs over every night and converts all the valuations into USD activity, and it syncs from the exchanges and the wallets to mappable chart of accounts for asset accounts, income accounts, expense. We run our own blockchain nodes as well as have intricate knowledge from the exchanges. And so we account for every fee, either exchange or on-chain, and we enable you to account for that both in the accounting platform here and in tax. Next slide, please. Here's where you can do ad hoc transaction reporting. You can actually save these as views. You can do reports and apply memos to this, either single transactions or in bulk. Next slide. And then obviously you get other reporting that perhaps if you've got a side system that you're not going to be driving this through the GL, then you can get custom reporting on here. And this is an example of one. Next slide. Legible tax. Next slide. One of the things that we think about from the profession standpoint as we view it is that the CPA firms are now facing complexity, delays, and pain from if you have taxpayers involved in crypto and they are self-selecting packages, then you're having to deal with them selecting various individual tax treatments and reporting for cryptocurrency rather than having a standard, and that complicates a CPA firm's ability to use that. You're also facing risk because if that taxpayer is involved in an audit, then you may not have, you may not know about the software that they've used to generate that reporting. And if you're going to assist in the audit, it will be whatever that particular individual taxpayer has selected and used, and you don't know if that's fully identified for all transactions and whether that software is quality and SOC audited. Next slide. We also work with corporations, and we have provided them with the ability to do this with their employees as well, and we provide the ability for them to collaborate with CPA firms to assist in that. Next slide. A little bit of how we go about this, client management and workflow. So this gives you as a firm the ability to look at all of your clients, set them up, send reminders, see where they are in the process, whether they invited, they're actively working on it, whether they've submitted it, generate reports for them, all sorts of things. Next slide. You can add team members and permission them. So one particular team member may be part of a team that is only able to see certain clients, and maybe another team member has access to high net worth individuals, or maybe you do it by region or by vertical. So we think that's important that you have the ability to have multiple team members as well as be able to permission them appropriately. Next slide. Detailed transaction, you can see here, there's a particular one where this transaction is an outbound disposal, and the chain of transactions that actually participated in that. So you can get all the detailed knowledge about that. Next slide. And then on review, you can get an idea for, is this matching up? Has the client left out anything? Have they forgotten a wallet or an exchange interaction? And then generate multiple kinds of different reports. This is for the direct individual. There are other reports for professional taxpayer systems, again, such as the Thomson Reuters Go system integration we have. Next slide. Again, the reports here, fully available across all the different clients, support multiple reports so that you have an audit trail of that and are able to take it and directly interface that with your tax processing system. Next slide. So that's it, a pretty quick overview of a complex subject. Again, we're happy to discuss further. There's my direct email. We've covered a lot of complexity in the past 30 minutes and would love to talk to you more about it. I think right now, Ron, we're looking to open up for the Q&A.
That's right, Kell. Thank you very much. Great presentation. The chat is open for questions from anyone in the audience. A couple of questions that we've got. You mentioned stable coins, Kell. Can you talk a little bit about, obviously they're increasing in what I'll call popularity. Are there any unique challenges around some of the reporting and valuation of stable coins?
Well, I think stablecoins as a payment methodology is really interesting. Their adoption is great. I think where you might have some challenges is in ones that are not necessarily strictly tied to USD in a bank, right? So those are the most simple form of stablecoins. I would encourage the whoever asked the question to check out the WSBA Stablecoin Primer. A great document I was able to contribute to with the rest of the WSBA contributors on that document where we talk about the different classifications. So there are some algorithmic stablecoins that may have some issues, as well as you may be aware that Libra, one of the main regulatory problems with it from the SEC is that it held a basket of different assets in it. So there are some troublesome things around certain classes of it, but it's a pretty big topic. I think the clearest ones are ones that are backed for USD particularly, and those are the cleanest.
Great, thank you, Kell. A couple of other questions. One of the things that we often see, particularly some of us coming out of the financial world, is the challenges of, and it's something that's been happening in the crypto world for a while, the challenges of data normalization. I know several firms, several organizations really struggle with that given the diverse nature. Can you talk a little bit to that? What was the effort around the Verady platform around data normalization? What are the challenges that continue in that regard?
Yes, that is one of the biggest challenges we face, and that's why when we first were doing the audits of Bitcoin, and then we had the 17 forks of Bitcoin that were somewhat meaningful in 2017, as well as the Litecoin, others, Dogecoin, and then Ethereum really changed everything from being what's known as a UTXO-based blockchain to an account-based blockchain. Anyway, one of the things that we do is we have a middleware layer wherein we transform and harvest all of the blockchains. So we run all of our own nodes that are participants in the networks. So we know they're up to date, they're on the main chain, that they have great data. And then we harvest that into our normalization so that we can report universally in our product set. So we think normalization and standardization of financial representation of value is critical. And that's kind of our base layer for the entire thing. It's something that is a challenge, and you've got to get right from the beginning. And I think some people that have looked at ad hoc ways of doing it without investing that time and design in the front are having some challenges now. So I think that is a great point, because it is fundamental to being able to report accurately across the universe of cryptos.
Great, thank you, Kell. Some more questions, and obviously, folks, please do keep the questions coming in. You mentioned some of the numbers that reported in previous tax years that were extraordinarily low, given some of the estimates of the number of people that held and traded crypto. Do you have a steer, Kell, on the number of 2019 individual returns? And I know that might be a bit of a difficult question, but have you seen that activity pick up? Have you seen the reporting be aimed to be more compliant? What are your thoughts there?
Well, I think it's definitely going to be more than 802. So let's say that to start off with. I think the reporting on that is going to be a little bit easier now that we do have the question. Obviously, there's been a big push between the FAQ, the guidance, the compliance division, and the messaging around all of that. I do think that, and the Aicpa commented on this as well, that the location for the virtual currency question is perhaps not optimal for the average taxpayer, that they might not see that question instead of it being in a more conspicuous location. And again, with the tax year being extended to July 15 and with everything going on, I think it's going to be a little while till we see what the numbers look like. I will say they will be up, obviously, from 802 or whatever happened in 2018 as well. But it's going to take continued compliance, messaging, education, and enforcement for the messaging to happen and for us to get closer to full adoption, or even close to, I mean, I'm not even sure if we're getting 50% adoption and compliance by the taxpayers at this point in time. So I look forward to more adoption and compliance in that realm. And I know the IRS is going to have to be doing some enforcement. Right now, they're still battling with this tax year in terms of coronavirus and all the difficulties there, but they will be having to use that tool to start getting everyone in line.
Great, thank you, Kell. A couple of other questions. One or two of them have been very product specific to the extent you're able to tell us a little bit about that. But are you anticipating or planning APIs for QuickBooks Desktop or QuickBooks integration?
We are not looking at QuickBooks Desktop at this time. We are a SaaS company and we believe in the cloud, particularly if you look at the move to remote work for everyone. The thinking around desktops or on-premises capabilities versus having cloud, at least connectivity and access and APIs into there. We will be staying with a firmly remote forward, SaaS-based and cloud forward technology because we think that's the future. We'd encourage anyone to maybe consider migration to that, though there would be a capability in our product to export via file and bring that into the desktop. But that API functionality is not going to exist for the desktop for us.
Thank you, Kell. The next question, interestingly, is probably something they should email you directly, but it's a very broad and important question. What websites or newsletters would you recommend to get good updates on crypto taxation and compliance? And I would argue that you already mentioned some of the really important work that the Aicpa has put forward, but did you want to comment on that?
I would say there's some great websites out there, but again, the Aicpa is probably one of the best sites because they are actively engaging with the IRS. The problem with some of the news, you can get a lot of great news around reactions to the guidance and the FAQ and things of that nature. There are, not authoritative, and there'll be more reactions to that. So it's hard, besides the authoritative one, to think of the right one to do that. I will say that we have recently onboarded someone who's been a leader at a global accounting firm, and you could look to our website to start producing some of that material going forward. Also, we may have some partnership opportunities to produce some of that, but I would stick with the Aicpa. Right now, they are the leaders, and again, that comment letter was very well done, and we think there's great things around that.
Great. The next question, I think the next couple of questions, Kell, tie into each other. What standards or methodologies are you using or recommending to audit valuations of crypto?
On valuations, we are looking at, I'm not sure if you're familiar with the level 1, 2, and 3 definitions on that, but as well as the primary markets. So we should probably discuss a little bit later, but there are ways of going about establishing, the primary marketplace and venue for the activity, and it is multifaceted. And then you have to look at things like, what is the price for that venue, if that's the appropriate venue. And I'm not sure if there are any basis to have a complete level 1 pricing source right now. Maybe the best you can do is level 2. Not much difference there between 1 and 2 as opposed to 3. But there's some processes around that. It's going to depend on the facts and circumstances, particularly for larger trading entities. And that's a somewhat complex one. For an average individual taxpayer, I would say that what we do in terms of dealing with standard aggregated indices, as well as things with, Crypto Compare, CoinMarketCap, there's some other pricing sources out there that do a very good job. There's assets where you can look at VWAP versus like actual time of transaction. We actually have all the down to the millisecond transaction data, so we can do it at that level, as well as maybe a daily VWAP or something. So it's a complicated one depending on the facts and circumstances of the particular filer, but glad to discuss a little bit more.
Great, thank you, Kell. And I think the next question is kind of in the similar vein. The SEC recently released proposed guidance on the valuation of any asset class. And I think, how are you approaching valuation of crypto for thinly traded assets? And I think it's along the same lines, I would suspect, correct?
A little bit. Thinly traded is a bit of a different beast, a little bit, as opposed to well-established marketplaces that you have to choose what's the biggest and best and most appropriate for the entity doing the trading. Like Bitcoin is not thinly traded, but you still have to go through the process of acquiring, or determining what is the appropriate venue to use as the authoritative pricing source for your activity. And thinly traded is a little bit different on that. That would be a more technical discussion that I'd be glad to have with the person who asked the question. But you can get into all sorts of things, and we've dealt with that with, when you had ICOs, there was a similar situation in there, in that they were pre-sold, and at the time of ICO, they might even not allocate the tokens, and then you get them 3 months later, and then they trade on one exchange for 1,000 coins and then not trade again for a week. And there's ways of doing that valuation that are mathematical and need to be justified. I haven't looked in depth at the SEC one. I'll take a look at that later, but there are challenges and certain standards, but glad to discuss.
Great, thank you. I think you'll enjoy the next question. How can I get my accountant, who is a great accountant but not crypto educated, up to date on crypto taxation? Can I ask him to partner with a firm like yours to serve their clients on this specific topic?
Definitely, we're happy to talk with firms, and we've done that, since our beginning, back in 2016, where we helped, kind of hammer out standards around confirming ownership, existence, balances in the audit world, and then going on into the accounting activity, and now with our tax product. So we've got a rather broad base, and happy to participate in that. I would say that, having the education and the motivation, again, that's a little bit why I talked about the numbers, is that at the very core of it, we've encountered some individuals in firms that have said, I'm just happy I'm retiring before this stuff gets bigger. And that's a valid thing, but it is complex, and it takes some motivation. We'd love to partner with people to do that and help them understand the meaningfulness of this and how powerful this is, and how it's going to change the shape of accounting and finance.
Thank you, Kell. Next question. Do you aggregate all major exchanges and wallets into the dashboard? And Kell, I would add to that something that I alluded to a bit earlier. What are the challenges around connecting and aggregating that data, given the diversity of different types of technology and access to those exchanges?
So the exchanges are probably the most problematic aspect of what we work with, particularly the API integrated ones. We're actually the first ones in the world to be integrated with blockchain.com. That we partnered with. And one of the things we find is that for other exchanges, they change their API without notice. They have glitches in their API. Sometimes they're down. We actually have over a half FTE that is dedicated to tracking the changes when they add new pairs, when they add new calls. It's a challenge. We would hope at some point that the exchanges would come to some kind of standard. And we think some of the recent exchanges getting AICPA SOC certified is going to help towards standardization. but it is challenging in the data that they do. I would say also particularly that some of the futures, derivative, margins trading and stuff like that, that some of the exchanges, Kraken, BitMEX, and others are doing, are even more intricate and harder to standardize. So to the extent that you have clients that are doing those more advanced financial instruments, that can be especially challenging over and above the usual.
Great, thank you, Kell. And I think the last question, and again, folks, please do keep the questions coming in via the chat. I wanted to talk a little bit, you had mentioned smart contracts earlier. What we've seen in the crypto space is very much the overlap between different professions and groups trying to set standards and set a method of moving forward. What does that look like for the accounting profession, things like smart contracts and law? Can you speak to that at all? It's a bit nebulous of a topic, but there really is a bit of a Venn diagram overlap to a lot of the concerns around smart contracts.
There is, and one of my concerns, I think, you know, if you think about cryptocurrency in general, or even if it was simpler times when it was just Bitcoin, you had, and still have, Fincen, IRS, the SEC, the CFTC, the OCC, CFPB. You have 6 or 7 different agencies, sometimes issuing conflicting guidance and regulations and thoughts around that. I think we're going to have a somewhat similar situation with the added complexity of various court rulings start to creep up when you have things. I mean, classically, you look at the Ethereum DAO smart contract, wherein there was an issue with the reentrancy that caused a complete chain split between Ethereum Classic and Ethereum. So take that to now where you're seeing DeFi operations issue things like flash loans, which are loans of cryptocurrency that have to occur within a single transaction. That is a smart contract. So if there's issues with that, with losses, with you know, non-performance, if there's anything around that, you need the technology, you need the accounting profession to look at what actually happened in terms of financial value transfer. You need legal, you may need some regulatory input. So I think, just like I usually speak about the regulators having issues with crypto because it's one of the first times they've seen an asset that you classify it on how it's used, not the intrinsic nature of it. You'll see a similar thing with smart contracts in that you need to have a more holistic view, and you need practitioners from all of these different agencies or, you know, technology firms like myself, like ourselves, accounting profession, lawyers, and regulators collaborating to come up with standards of evaluation and hopefully standards for smart contracts, and how to deal with issues when there are problems in the execution or the contract nature of them.
Thank you, Kell. Last couple of questions. You had mentioned, I think you had mentioned earlier, central bank digital currencies, and it seems that every central bank is kind of looking at potentially a central bank digital currency or some type of implementation. What are your thoughts about that, and what are your thoughts about how that impacts the accounting profession?
I think it's fantastic, and I think it's going to depend on how that's done. You may or may not know that you know, China's experimenting piloting with it. Also, our recent partner Algorand is doing the world's first central bank digital currency in the Marshall Islands, which is really interesting. I think the way I think about it is that it may cause an issue primarily for banks. If you have digital currency from the central bank, and that's going directly out, and you don't have intermediaries except for maybe smart contracts, I think it's the banking institutions that need to be worried about that. I think to the extent that accounting firms and professionals can be familiar with and comfortable with the ways that cryptocurrency act, I think you'll just think about a central bank digital currency as maybe a grandfather USD digital coin that's happening, and everything that you learn around cryptocurrency will translate to that. I do think it will disintermediate some of the financial institutions in the middle, though. So I think it's more of a concern for banks and other people of that nature or entities of that nature. You will always need the accounting profession from the advisory standpoint to all other facets. So the nature of it, I think, is not going to change, but the disintermediation, I think, is of concern to other entities.
Excellent. Thank you, Kell. So I think we've just wrapped up on questions. Additional questions, Kell, as you mentioned, they can reach you at kell@verady.com. Any additional questions, please do reach out. Kell, as always, this was wonderful, great presentation, a lot of great feedback, and a lot of important content. Thank you all again, and thank you for your time, and see you next time.
Thank you. Cheers.